All right. Well, I'm super excited. I'm joined today with Lee Murphy, a financial advisor and another podcast host. And so excited to have him here. We're going to talk about what it's like being a financial advisor. So a lot of the younger listeners have always asked me, what's it like getting into the business? How did you get into the business? What's it like being a financial advisor? So teamed up with Lee here to hopefully be able to go over some of that with you and just talk about the investment business and some of the things that are great about it, some of the challenges, and really just what it's like. So Lee, welcome to the program.
Ryan, pleasure to be here, man. Let's get after it. Let's give your listeners something to talk about.
All right, man, let's go. So what piqued your interest on becoming an investment advisor?
For me, it started in my childhood. So I grew up in a kind of middle class family. We had decent money, but we didn't have a ton of money, enough to live a good life. But my grandfather, he had actually made some really smart moves in his own financial picture. Like he got into real estate, buying securities, and he had wealth. And through our childhood, he helped put my sister and myself through private school. So it was one of those things that you didn't really think about it too much when you were a young child, but then as you get older, you start to appreciate, how it shapes your life. And so I looked at where I was when I was a kid, and I was like, man, I was kind of a troublemaker. I was getting into trouble. I was talking back, and I figured if I had probably gone to a lot of the public schools that were around in the place that I live, which is Morgan Hill, California, Gilroy area, I probably would have gotten into some trouble. So it made a major impact on my life. And I didn't realize it till later. But then I think once I got to high school, I was like, man, I want to do something where I can help create wealth and, just change the trajectory of people's lives. And that came from my grandfather. He gave me that gift.
That's so funny because my grandfather is the same as me. When I was 16 years old, 15, 16 years old, he gave me $100 and started showing me how to invest. And that was it for me, man. I mean, it was just, and it's interesting that you have these people that come into your life that can just completely change the trajectory of your life, just by having that influence. So
it's amazing.
How long have you been in the business?
Over 10 years now. So I'm on my 11th year.
Yeah.
But yeah, I've been in it for a while.
Okay, good. So it's funny having another financial advisor to be able to share stories with. So what are some of the misnomers that you think people have when it comes to working with a financial advisor?
Probably the main one that I hear of is, only the rich people need financial advisors, and you don't need a financial advisor if you don't have a lot of money. I don't know about you, Ryan, but do you get that a lot?
Yeah, like I can't work with you until I have money. It's like they don't understand that you need to have a plan to be able to get to a place where you have money.
Exactly. Exactly. Yeah. And that's what I've realized is like the people, they think like, oh, well, I'm going to go to you once I have money. It's like, no. You're getting this all backwards. Like, it's like the equivalent of if we all want to get in shape, right? We're recording this right around the beginning of the new year. We all want to get working out, lose those LBs. I mean, are you going to, go to the trainer after you get it all together? No, you go to the trainer now so you can lay the right foundation. So eventually you can have jacked abs or, super tight legs, whatever your thing is.
Yeah, I think that's one of the biggest ones is, not working with somebody to develop that plan. And also the thing I think that is probably the most undervalued thing about working with an advisor is just having someone to bounce ideas off of. Because I know you've worked with a lot of people. I've talked with hundreds of people. I've seen people do all kinds of different businesses, different investment strategies, different this, different that. And so just that experience of being able to tell somebody, you don't have to learn every lesson by yourself. You can learn from other people. And so leveraging the stories that you have and the lessons becomes a big piece of what makes working with somebody valuable.
Oh yeah, absolutely. And then the other thing is one thing I didn't realize when I got into the business is how many things that are out there. All the investments that you and I hear about that people are like, oh, I want to try this. I'm going to try that. My friend did this. My brother-in-law told me about that.
Yeah.
And it's a lot of these things, they all sounded great on the surface, right? If it wasn't something to talk about, you wouldn't hear about it. But all these things are worth talking about. But once you get under the hood and you get to see how a lot of these things work out, you end up in a bad spot. And so that's another thing about, having a good financial advisor is like, they're going to spot some of the crap that's along the way in your path and help you avoid it. And there's a lot. I mean, there is so much out there. And I think you can attest to this. There's hundreds of different investment themes. And I would say 95% of them suck.
Yeah. Well, and I tell people a lot, like, it's amazing how much money is made off the ignorance of others.
Oh, yeah, absolutely.
You know what I mean? Like, where something sounds fancy, or, if it's complicated, it must be a good investment. Whereas I'm completely the opposite. Like if it's got too many moving pieces, I start getting pretty nervous. Right.
Same here.
So let's talk about some of the biggest financial mistakes you see.
Yeah. So for this one, I know we talked about this topic before. So what I did is I took the liberty of making 7 different types of investors that make mistakes, right? So this is hot off the press.
All right.
Just came up with this, but I'll share them with you. So this is the number one, the perfect moment investor.
Yes.
So this is the person that's waiting for the perfect time to start their investment career. They're waiting for the market to tank. They're waiting for real estate to tank, and they're waiting. And they'll be ready. They'll be ready when it happens.
Hey, Lee, can you tell me when the next financial crisis is going to hit so that I know when to start investing?
Yeah. Do you want the time, the second? I can tell you.
Yeah.
That's another warning sign. If you ever hear anyone that says they know when the time is coming, run.
Right.
Run really far away.
I get that one a lot. Hey, I'm going to invest the next time the market, has a correction. That's when I'm going. Right. And it's kind of like I always tell people, hey, dip your toe in the water. Come on in. The water's nice. The water's nice, Yeah. And because really, I mean, consistency is the key.
Yeah, that's exactly right. And then going to that point of like finding that perfect time. I mean, there is a lot of financial gurus out there that people look up to, and they're always making these predictions like, oh, this is when it's going to happen. This is when it's going to happen. And you know what? I keep track of a lot of the most popular ones. I won't call anyone out on this,
right?
But I really try to stay on it and like hear what they have to say just for my own entertainment purposes. And you got people that are the leading experts, like supposedly have all these books and they have the financial brand and everything, and everyone follows them like a cult. And they're saying it's going to happen this year. And guess what? They've been saying that for 7-8 years in a row. I've watched them. I've watched all these people making these predictions, and they'll be right. And then once they all right, they're gonna highlight it.
There's a lot of people who miss 100% gain to save a 20% loss.
Yeah, right. And ain't that the truth?
I mean, and it's like, whoo, sure am glad I missed that one. Okay. And all the dividends, all the, the things that go with it, all the dividend reinvestment purchases they could have had, more shares they could have had, all gone. So yeah, and you're never going to be, and it's funny, you can say that about the perfect investor, but it's the same with anything. The perfect time to start a business, the perfect time to, start working on your health. I mean, all those things, like it's never going to be the perfect time.
That's absolutely right. So which brings me to investor number 2.
Okay.
We call the researcher. So the researcher knows everything, Ryan. You know this because they've read the books. They have a YouTube channel they follow, and they even bought the course. So therefore, they are God-given experts, and they know this better than you do. They know way better than I do. And all they do is they research, and they don't act because they're still researching.
Right.
There's no action. Right. And I have a couple clients, or clients, but these are prospective people right now that want to work with me. And they're like, they circle back to me every 3 months. Oh yeah, let's talk more about this, and let me do some more research. And it's like, come on, man, you gotta move forward. You can't just be in this, just thinking all the time about what you're gonna do. Like you have to take some action. A little bit of homework is fine, but the people that get caught in not taking action, I call the researcher. That is a huge mistake that I see with people. Do you see that too?
Oh yeah. I mean, I see that a lot too. I mean, it's funny because I said in one of the episodes, investing is one of the only businesses where, you can go to Barnes and Noble. If I were to go to Barnes and Nobles and buy a book on heart surgery and read 3 chapters and be like, okay, Lee, I'm ready to do some heart surgery on you, man. I mean, investing.
Did you at least read chapter 4? Okay,
Yeah,
good.
exactly.
We're ready.
Yeah, I'm ready to go. But that's how investing works is somebody will read a book and then all of a sudden they know they have the latest deal and it just becomes problematic. And then, that procrastination of doing research. And like you said, I mean, at some point you got to get going, you got to pick something. And that's really again, that's where that consistency comes into play.
Yeah.
So, all right, what's number 3?
Number 3 is the DIY investor.
Oh, yeah.
So this person, kind of similar to the researcher, but they just keep researching and they try to do it all themselves without asking the experts, right? They think like, well, why do I need to pay someone like Ryan or Lee to do this? I can find this on YouTube and I'll just do it myself and I'll save so much money because those guys, they just take my money. Like I can do this all by myself. And time and time again, it's really funny. I've worked with some really successful clients. The firm that I was at for many years, like we had very high net worth clients that did well and they followed our advice. And then we'd always run into people that, were the DIYs and they had it all figured out. But then when you looked at what the assets they had little to no money. So they might've had like these concepts down of, like why they shouldn't have a financial advisor. But for some reason, a common theme was that these people, as smart as they thought they were, they had little to no money. And that was a consistent theme I saw. And not to say that was the rule all the time, but it was an extremely common one.
Well, it's the notion of stepping over dollars to pick up nickels.
Yeah.
Where you think you're saving yourself money and you're really not.
Yeah. And the common theme with these people is they think they're so smart, right? Because you can figure out everything yourself, that they end up picking bad investments where they end up taking big losses. And then, with risk management, tax strategies, investment allocation, the financial plan, they get it all wrong. And that's where their fault was, is I think once you're a DIY investor, you can think that you know too much and that gets you in trouble. So that was a constant thing that I saw, is these people that, knew everything, got too confident. They didn't ask the expert and they made mistakes.
Well, it goes back to what we just talked about a little while ago. It's just having somebody to bounce ideas off of, or having somebody that you trust to bounce ideas off of, is paramount. I mean, just for a lot of things, it's not just investment advice. It's somebody in the health field or whatever. Like just, you got to have somebody that you trust that you can start to talk to. That's why, like when robo advisors came out, like I wasn't worried, because I know that when the market gets crazy and all that, investors want somebody they can talk to.
Absolutely.
And so if you have, an algorithm managing your portfolio, you're not going to feel real great because it doesn't really talk back to you unless you understand, ones and zeros or however they communicate. Right. I mean, it's, at the end of the day, we want somebody that, helps us drive the truck, so to speak.
Yeah. That's what I've seen too. And when the robo advising was becoming popular, I was a little concerned. I was like, oh, is this going to take all the regular people out? And then after they had enough of these big firms that started unleashing them, I was like, okay, yeah, this just cannot deal with, it can't replace someone that has high emotional intelligence and understands like how people feel. It just wasn't the same. So yeah, interesting concept, but yeah, it hasn't been able to fill what we do. The next one is the cowboy investor.
Okay.
So the cowboy or cowgirl. So now you like this, you're out there in Texas, right?
Right.
So you guys got a lot of cowboys, cowgirls out there. So this person is only focused on returns. They are always focused about the returns, the performance, and that's it. But they don't have a strategy in place. Like that's all. And the thing is, like, as you and I know, you can have a great strategy, but still not get the returns you need like in a short amount of time. But eventually the strategy will win out. Cowboys, they're just going, what's the biggest number? What's the biggest number? And they end up falling into mistakes, getting into risky investments, and they eventually get burned. But I don't know if you've had much experience.
Yeah. You call that the cowboy. I call it the home run hitter.
The home run hitter. Yes.
Yeah. The people who just want to hit home runs and be able to tell their friends that they made 150% on this one stock, even though they've lost on the other 15 that they're down, 80% on. But, yeah. I mean, everybody wants to talk about their winners. Nobody wants to talk about their losers.
That is so true. They want to be the person at the cocktail party that's just talking about the great investment that they had. But man, I'm telling you, at that cocktail party, out of the 30 people that are there, there's 27 of them that might have done the same thing, but they don't want to talk about it.
That's right. That's right. That's a good one. That is seen everywhere.
Yeah. And so on to the next one is the Gypsy Investor.
Okay.
So this person, they just invest, but they have no goal of where they want to be. They haven't taken the time to build out a plan or get their goals in place. So they tuck money away, but they don't have the purpose, right? So the problem is they don't have the right plan design, which is what you need a good financial advisor to do. You don't have the proper investment strategy that works for your goals, and you don't have a way to protect everything that you've put in place.
Right.
Your insurance coverage, liability coverage, estate planning. None of that happens with the Gypsy Investor. The Gypsy just kind of puts money in, but doesn't really understand where it's going to get them. They hope to make money, but there is really no concrete end game.
Yeah. And those kind of investors, if they're open to some advice, can turn into really good clients because they at least have the habit of putting money back. It's just, they just need to be guided a little bit. It's like, okay, let's if you can get them to create a strategy, but sometimes sometimes you can't.
Yeah. No, that's a good point. They do end up being really good clients because they have one of the hardest things down, being able to have some discipline and save.
Right. Which is key.
Yeah, that's the fuel, right? That's the fuel to the car that gets you to where you want to be. So yeah, to your point, that is true. Next one is the greedy investor.
Okay.
So yeah, kind of like
one.
similar to the the home run hitter, but this person's all about trying to just make money.
Never enough.
It's never enough. And so like I have this one story. I had a client that kind of struggled with building their wealth. They're a great client, like just nice person, but they just really struggled with their money habits, and they were always a challenge. They ended up inheriting enough money so that they would be financially set. Like I did the calculations. I said, hey, you know what? Since your parent passed away, right now, you work the end of this year, you're retired. You don't need to do anything. You're going to live. You have more than enough money. And this person's like, well, that sounds great, but I've been looking at this business, and if I invest money into this business, I could make, 100x because this company is doing something really cool, really special. No one else is doing it. And Ryan, like people get really caught up in the hype train, and like it's kind of like you can't stop it. Like once they get laser focused on it. And so for this client, I just said, hey, let me look at this for you and let me see if this is even a good investment. I gave them a plethora of reasons, and it took me days of research on their company. I just did it to really give them good advice. And I gave them up all the reasons they couldn't do it. They said, you know what? But sometimes you got to just take the gamble. Like sometimes it's worth it. Like that's living life. And I just said,
YOLO.
I don't agree. YOLO, and it's gone. And so unfortunately, all the money that was invested with the company crumbled. And for the last 4 or 5 years, this client has just been draining their account. And I think in the next year or two, they will have next to nothing. And they're in retirement. They're right into the retirement age, and they'll probably have nothing unless they can't figure it out. But it was a big mistake.
What ends up happening, especially with somebody who inherits money or just for whatever reason, it's one of those weird things where people get give hyper attention to their funds. And it's almost like holding water in your hands. Like the more you're trying to hold it, and it just slips out. And I've noticed that like sometimes when somebody inherits money or they haven't made their own money, they don't know how to do it. Like they don't know how to build it back up. So they get more worried about their money, and they end up making bad mistakes because they're trying to find a quick fix. So for example, like I'm in an area where a lot of people sell businesses. And so I've had clients who sell businesses, and then all of a sudden they want to invest in all these other businesses. And I say, hey, you've already won. You sold your business for a ton of money. Like you already won. Like, are you going to spend all the money you made trying to do it again? Like, the risk reward isn't there. And so I'm not really sure if it's, I think part of it's greed. I think part of it too is sometimes people don't know what to do with their spare time.
Yeah.
It's hard. It's easy to save money when you're working all the time. And then when you have nothing but time, you start looking at crazy deals and things that keep you busy,
Yeah. It's almost like, people are their own worst enemy. If they got enough time on their hands to research and go down the rabbit hole,
Yeah.
they can get themselves in some trouble. And you're seeing that now with, crypto. You hear about all the people that are becoming overnight millionaires, but man, you're not like what we talked about before. You don't hear the bad side of the story. You do not hear it. And as someone that's in the financial arena, I get to hear it because I get to talk to people and I ask them, like, tell me more about this. Tell me about what you did here. And I'm telling you, even though the crypto arena is hot right now and everyone's talking about it, there's way more people that I know that have lost their butts from either a bad crypto investment or getting hacked than the people that have actually made a lot of money in it. But you don't hear that side of it.
Yeah, no, I mean, it's kind of like when you think about athletes, like take NBA players, you take somebody like Kobe Bryant or Kevin Garnett, who went straight from the NBA and had great NBA careers, but that's like two guys. I mean, there's a lot of athletes that went straight from high school to the NBA that never made it. That never, and so it's the same thing. You're always going to hear about the major success stories, and they're not writing articles, very many, on people who didn't do well. That's why one of the books, I don't know if you've ever read it, but one of the books I've recommended on this podcast over and over again is What I Learned to Losing $1 Million. It's just a great book about somebody actually honestly talking about all the financial mistakes they made, which is a gut-wrenching book I'm sure to write. But I mean, you never hear about that. You never hear about somebody go, hey, Lee, let me talk to you about how I messed my life up. I mean, it's not that people aren't going around saying those things, everybody's got their highlight reel.
Pride and ego, man. It's a thing.
Yep.
It is a thing. And it's tough to put that down. But yeah, the greedy people, that's one. And my last one is the scaredy cat.
Okay.
So the scaredy cat is kind of the opposite of the greedy investor. They're too scared of the market. So they say, well, I just need to keep everything in cash. And they think like, well, look at it. I have all my cash. I haven't lost it. But people don't realize inflation is a real thing. Yeah. I always tell the guys that are on my podcast, we talk about the impacts of inflation. And I look at market volatility, like these big, massive downswing market going down 40%, 45%. I'm not worried about it. I have total faith in, the market. If you have a good portfolio structure, I have a ton of faith in it. It's all about time horizon, but inflation is one of those things that it scares me. Yeah. Because print enough money, I mean, that's gonna show up in the terms of inflation, and your money becomes devalued, it becomes worthless. So inflation is one of those things. And the only ways to offset that is to be a good investor. You have to invest in things like real estate and stocks and have a good portfolio. But the scaredy cat, they just are too scared to lose it, and they end up losing it and they don't even realize it because they're losing to inflation constantly. They don't have a way to make that money grow. So
they say in heart disease is the silent killer, and inflation is the heart disease of your portfolio. Right. Yeah. Like it's, you just don't realize it. When somebody retires at 65 and they say, hey, this is great. I have exactly, my money is great. And then 15 years later, when they're 80 and milk's gone up and eggs have gone up and gas has gone up and all these things have started to increase on them. It's one of those things you don't notice till it's almost too late. You can't go back to work at that time. You know what I mean? Like there's, that just, you kind of miss that window.
Yeah. I mean, it's equivalent of like, you have like a couple $100,000, say over this last year sitting in your checking savings account, and you need a certain amount of cash. But if you're keeping super high amounts of cash, like you have to look at the impact. So it's like, if you're having 6% inflation, I mean, you really lost like 12,000, if you had a couple 100,000 there. So you have to like think about that. Like cash is good, but cash, the saying that cash is king is a big lie. I've never agreed with that. Yeah. People say that cash is king. Nah, it's not. It's not king. It's a joke, sometimes it's like you have to be aware of that stuff.
Yeah. So one of the other questions I have is, have there been any unrealistic expectations brought to you by prospective clients?
Yeah, absolutely. You get this probably too. Like, I want to make, I want to make, at least 10% a year, but I don't want to ever have a chance of losing the money. I mean,
Right.
that's kind of like a common thing is, people they want their cake and they want to eat it too. And the thing is, like, in life, you have to take on some amount of risk to get that return. It's risk to reward is there, and that will never change.
Well, the big key is that you have to understand what kind of risk you're taking. Most people are very bad, judges of how much risk they're understanding the risk that they're taking. It's not that risk is bad. You just have to right size it, right? You got to know how much risk you're taking. But I had a guy, I had a prospective client one time tell me he wanted me to double his money every 2 months. And I said, hey, if I could double money every 2 months, I would just double my own money and not do this. You know what I mean? It's just, and he was 100% serious.
That's wild.
And I
haven't had anyone that crazy yet.
It's just, the expectations sometimes are a little nuts, but, thinking of that, what advice would you give to somebody who's looking to work with a financial advisor? Like, what kind of advisor should they look for? What should their expectations be? What kind of thoughts do you have on that?
I think, the number one thing is experience. As someone that started off in the industry, with no experience, I appreciate all the clients that gave me that chance. Right.
Yeah.
But the thing is, man, I look back and Lee Murphy in his first, second, third year, I would not have worked with him. I look back on my own self and I can honestly say that. I mean, I thought I had the confidence in the world, but then I look I'm like, oh my gosh, there were so many little mistakes I probably made. And I remember a lot of things that I did wrong. And I think my own personal opinion, everyone deserves a chance, but if you get someone that that's in the business, a lot of times people try this business and they wash out, but you want to make sure they're in it for a while. I would say work with an advisor that's been there for probably the minimum 3 years. That's my feeling today is
right.
And then, 5 years, they probably got a good sense of everything, but experience matters. Absolutely. The other thing is fiduciary status. You want to work with a fiduciary, someone that has your best interest, has a legal obligation to do what's in your best interest. So I always tell people, ask if they're a fiduciary. And then third would be independent. You can do what you think is best for the client. You don't have Bank of America telling you, oh, you have to use these funds or you have to sell these products. Being independent is powerful as well.
Yeah, I've worked with some people before. I think just enjoying the person that you work with and being willing to have real conversations with somebody. I've talked to people who have said, oh, I haven't talked to my advisor in 2 years. I'm like, 2 years? What kind of relationship is, you don't have a relationship, and they go, I just don't like calling them, man. I just don't enjoy talking to them. I go, why are you working with them, man? I mean, if you don't enjoy talking to somebody, you really got to evaluate, if your spidey sense or whatever goes off and you're uncomfortable, talk to some other people. There's a lot of people in this business, obviously, as you pointed out. So having somebody that you feel like you can have an honest, conversation with is paramount.
Absolutely.
Sure. Let's see. So, what's some of the most surprising things to you about becoming a financial advisor? Like whether it's working with clients or financial decisions people make, what are some of the surprises that have come up to you?
From before I got in the industry, how I thought it was to how it actually is.
Right. Exactly.
Yeah. I would say, going and looking at the business before I was in it, I thought it would be more like people call you, you make a transaction for them. They say, lead trade, lead buy, and you're kind of filling orders and pushing buttons. And it's really none of that. It's more about kind of what we talked about in the beginning, dealing with the emotions of people, trying to get them to create good habits and make right decisions and try to avoid the seven types of bad investors. I mean, that's our battle, right? you and I do that on a regular basis. We try to pull people away from it. And it's about behavior, managing behavior, and really having a trusting relationship. That's what I never thought about. I was like, it's all about, doing right by people, gaining their trust, letting them know that they can confide in you, and, helping them manage their emotions.
Yeah.
So that's kind of that's what threw me for a loop, because I never thought any of that before I was in the business.
Yeah, I think before I was in the business, I would drive. I used to drive through the nicest neighborhoods I could find, and like to help me stay motivated when I was in college and think about, oh, I want this house, or what does this person do? And I started getting clients that had these big houses, and I realized how expensive they were to keep up. I think one of the biggest surprises to me is how much effort has to go into like keeping a family wealthy. How much effort goes into keeping it all going, whether it's the estate planning, the trusts, whether it's the investments, whether it's filing everything. Like there is a lot of effort that goes into keeping a family going, as far as especially a wealthy family, to make sure that everything is going the way it should be. I mean, there's a lot of moving parts to it, and I think that most people are pretty unaware of that, especially people who, whether they come into money through an inheritance or through selling of a business or whatever, that they don't realize that until they get that money. I mean, there's a reason that most lottery winners go through the money in 3 to 5 years.
Yeah.
Right? I mean, like, if you don't have the discipline, if you don't have the habits, if you don't have the consistency, and then you don't have the discipline to just work with people and get everything structured properly, I mean, it's really easy to rack up a lot of things that take money instead of make money.
Yeah.
Right? All the things that you see on Instagram and everything, those are all money takers mostly. Right? They're not, so making sure that people put money into things that are going to produce assets to keep that lifestyle going has been a huge, huge surprise. Just having that conversation with people.
Yeah, absolutely. I see that in my own life too. Is just as I've accumulated more wealth, it's more time. It's like, I gotta meet with my attorney, I gotta meet with my tax person, and and a lot of these really wealthy clients, I mean, there's a lot that goes into it. A lot of estate planning and tax planning and financial planning. They have teams to help manage the complexity.
Right. I've had to tell some clients, like, hey, you need to get lean and mean. Like you say, when you first got into the business, you didn't realize the emotional intelligence that goes in. And that's kind of the thing. You would think that people would be impacted by market fluctuations, but they're more impacted by a death in the family, a divorce, job loss, a job change. It's those kind of things that force people to look at their finances. But because those things are so emotionally involved, a lot of times that might not be the best time for them to look at because they are so emotionally charged by whatever's going on around them. So having somebody that is a trusted advisor can help be a sounding board of reason, like say a death or something, like, hey, you don't need to make any major financial decisions for 6 months while you grieve. Right? Having somebody that says those things to somebody becomes a big part of it.
Mm-hmm. Mm-hmm.
So if somebody's looking to get into the business, what advice, if you could go back, talk to Lee, 11 years ago, 12 years ago, how would you tell somebody about getting into the business? What advice would you have for them?
I would say, go find someone that that's in the business and have a conversation. When I had interest of like starting my journey, I actually remember driving to a bank on a Saturday, and I said, "Can I talk to one of your financial advisors?" And they led me to this guy, and he said, "You want to talk to me about what?" I was like, "Yeah, I want to figure out how to be a financial advisor. Would you talk to me?" And he's like, "I've never had this happen." He's like, "I would be happy to talk to you because this is the first time it's ever happened." And he gave me advice on what I had to do to get there. There's different avenues also, right? I mean, that I wasn't aware of. I mean, there's, you could work through the banks. And that's one of the major avenues. You can work for Chase or Wells Fargo, and there's a lot that goes into it to going that route. And then there's the other side where you can, kind of own your business. I didn't know that when I started. I thought, like, I just want to be a financial advisor. I want to give people good advice so they can create wealth and, have a better life. But there is different avenues that you can travel down. You have to have a conversation with those people that are on that side. So I would say, the two main avenues: working for a commercial bank or a big bank, or, the person that's working, in their own company or for a small boutique firm. Those are like the two main ones. Talk to those, find someone and talk to them and pick their brain.
And it's one of those businesses too, that when you get like your first job and you start seeing how everything works, you kind of realize where you want to be, but you got to be in the, the industry a little bit so that you can see all the moving pieces and then go, okay, that's the part out. How do I get there once you actually kind of get inside and can kind of see how it all works? I think is important too.
Yeah, absolutely. That helps. I had a really good buddy. We started off, at this firm, and it was kind of like a mill. Like, they kind of brought in a lot of potential people to try to become financial advisor, and they'd fire you super fast and get rid of you. And we were one of the lucky ones that was left standing in our first couple of years. And they're like, man. And after it, I was like, man, I could do this. I like this.
Yeah.
And my buddy was like, I can't do this. He's like, this is not for me.
Right.
And so then he went to the bank side, and he's had a really successful career, working for Fidelity, and that really worked for him.
Yeah.
For me, that wasn't me. And I figured out that, like, yeah, I like being the boss. I like being able to not have a corporate structure where they tell me what to do. I like to be able to have my own thoughts into how I advise clients. And that was my avenue. But yeah.
It's funny. I worked at a place like that too. And I stopped counting when the 100th person came and went. I mean, like, it was just one of those things. Like, I was calling people, bouncing pennies into a cup in between calls. I mean, it was I was like, man, but it forced me. I'm glad I learned that lesson in my 20s, and it forced me to find a better way. But that's kind of the thing, you take one of those jobs and then it kind of opens it up to you and you go, okay, I love this industry, but where's my fit, kind of deal. So I know you have a podcast, man. Let's talk to us about your podcast. Where can people find you? What are the topics y'all cover? Give us the lowdown.
Yeah. So for our podcast, it's the Free Retiree Show. We're a top 20 podcast on FeedSpot talking about retirement planning and investing. And we kind of have like 4 major pillars on our podcast. So we talk about career advancement, and big reason for career advancement is, hey, you got to make money to invest, right? So you want to be good at your career. You want to find what you're passionate about, what makes you happy. So we help guide people on that side of it. My really good buddy and host, Sergio Patterson, he's a LinkedIn executive, and he gives a lot of great advice on how people move their career forward. I handle the money side, talk about, hey, how do we invest that money? How do we get ahead? How can we grow that wealth? And then the other host is an attorney, and he kind of handles the avoiding the big mistakes, because, what we talked on this podcast, there's a lot of mistakes people make in the career side and the wealth side. And so as the attorney, he thinks very differently than I do. We get a lot of very entertaining arguments from what I've heard from other listeners. They really enjoy our banter that happens quite often, but he is there to help spot the mistakes that people make in the career and the financial side. And then the last component is we try to bring on really successful people that have just had uber amount of success on the career side or the financial side. Like, we just had Larry Swedrow on, who is, written 19 books, one of the top financial minds in the US. We've had Professor Kotlikoff, who's, I think, ranked 15th best economist. We've had the CMO of Realtor.com on for the career portion. And, rumor is we're going to have Dr. Ryan on the podcast as well. Coming up. But we keep the benchmark very high, and and it's all about learning, right? We want to learn from the best. So
yeah, I'm excited to come on to yours and talk about behavioral finance, because I think if people can understand that a little bit better, it makes their investing life a lot easier. Understanding how you are as an investor allows you to design that plan that can keep you in it, which is the key, right? The consistency to investing. I mean, you got to be able to stay in the stuff that you're in. Number one mistake people make is they trade too often.
Yeah.
So, I mean, so I'm excited and I appreciate your time, man. I really do appreciate having the opportunity to sit down with you, and looking forward to coming on yours, man.
Yeah, man, it's a pleasure. And like, it's honor just being on your podcast. Cause like I talk to a lot of people and, you got it right. Like the way you think about finances, all our conversations we've had before this contest, I was like, man, he just gets it. And it's just an honor to be, on your podcast.
I appreciate it, man. Talk to you soon.
All right.